bad signal.
Water? Do we need water?
I got some issues. Only child syndrome. One love. Hit him with the one love.
1 second, we're just waiting for some more viewers to come on in. Good afternoon, Facebook family. Good afternoon.
How y'all doing?
Good afternoon. Good afternoon. If you can hear us, please press 1. If you can't hear us, please press 2. If you can hear us, please press 1. If you can't, please press 2. Tag 5 friends. Tag future business owners. Tag 5 people who you just want to grow and make money with. What we're going to do, we're going to pretty much discuss some things on how to actually build business credit. Last week we talked about how to structure your business. We're going to kind of do a short little recap regarding some of those things that we discussed last week. But we're just going to wait for some more followers to log on. But thank you for joining us. Please tag some friends. Please share this. Please just get this video out to your loved ones, family members, and even some of your enemies. It might help you out if you help some of your enemies out. All right, so just give us 1 second, please. You want to go over there? If you can hear us, please press 1. If you can't, please press 2. I'm tongue-tied this afternoon.
I'm trying to get this thing shared.
Trying to get it shared.
All right, good afternoon, good afternoon. Andre Coakley here, President of Credit 360. I'm here with...
How you doing, John Bowen? Vice President of Credit 360.
Okay, John Bowen, Vice President of Credit 360.
We all wear all the hats.
All right. What we're going to do today is I'm going to do a short little recap. We're going to discuss some of the few basic topics that we went over last week regarding building or structuring your business. This week we're going to talk about how to structure your business credit and grow your business from a financial standpoint by getting your business credit in line. All right. Short recap. Last week we talked about forming your business. What some of the aspects you should be thinking about before you get your business structured. And I'm just going to hit some of those few 10 key points that we went over. The first one was conduct market research. You want to know the background of the business that you're going in. You want to know if there's a need for your services. Like the example I gave last week, if I'm an Eskimo selling ice cubes, being in Alaska might not be the best environment for me to sell ice cubes in versus me being in a hot climate like Bahamas, where my actual product or service is a necessity, and people are probably going to need it on a wider scale or wider range. The second aspect we talked about was writing the business plan. We always want to write a business plan the same way a football coach has a playbook or has plays for the players to pretty much follow suit. This lets you know where you need to be at each particular stage of the particular process of building your business or building your brand. Business plan, very important. Long story short. The next category we're pretty much going to talk about is how to fund your business. We talked about funding your business. You can use crowdfunding, venture capitalists. You can self-fund your business. These are just certain ways you can actually get funding, but keep in mind, funding sources normally means you're putting somebody else's hand into your cookie jar. So we want to put ourselves in a position where you can get as much funding as possible, as I like to say, as free as possible, because most funding has some type of interest rate or some financial gain coming back to your funder. The next topic that we had discussed was picking the business location. We know location can be very, very, very important. The same thing when they say someone's buying a house, what's the most important thing? Most people say location, location, location. And location can be a very big deal breaker as far as constructing your business. If you didn't watch the live stream from last week, you can always go back and review it and kind of go over some of those topics that we already discussed prior to that. The next segment we went over was choosing your business structure. Whether you're going to be a sole proprietor, LLC, S Corp, C Corp, all these things are very important. And also they affect the growth of your business. Certain entities might kind of stunt your business growth because it might not have certain, I guess, capacities, or it might not fit certain areas that are going to allow you to excel. And then we also talked about the business name. The business name is very important when you're talking about a business name. The reason why we're talking about these things is because your business name needs to be possibly trademarked on a national level, on a state level or local level. You're going to have that pretty much set up with the Division of Corporations or your Secretary of State. They're going to set up your business structure, and when you're setting up your business structure, you're also locking in your business name for your particular state. Okay. The next category we talked about was getting your federal and state tax ID numbers. This is going to be actually your numerical identifier for your business. These numerical identifiers are going to help put you in position to be able to file taxes, to be able to pay taxes, to be able to do things along those lines. All right. And then the next topic we talked about was applying for your business license and permits. This is most likely going to be on a city or local level. Let me back that up. Depending on what line of business you are in, there are some licenses that are on the federal level. There are some licenses that are on the state level. But majority of businesses deal with licenses somewhat on a city or municipality level, where you have to actually provide some type of license to show that you can, do business in your particular city or municipality. And the last topic we discussed was, once you have all those things taken care of, is opening up your bank account. Once you have your bank account open and you have all these other 9 things pretty much in line prior to that, it should put you in position to have a full-fledged business and be able to run full speed ahead with your business. Okay.
We'd just like to thank Miss McLean, Miss Coleman, Miss Riley, Miss Rodriguez, Miss April, Mr. Wright. Thank you for watching and tuning in.
Thank you.
All right. So,
Appreciate it.
Dan, just want to thank you guys for tuning in. We appreciate you. If you are watching this video, please feel free to share it. Tag 5 friends, tag 5 future business partners, tag 5 enemies. Be a blessing. Just tag somebody. Just do me the favor and tag somebody. All right. We appreciate it. So now we're going to pretty much break into the segment that we came here to discuss today, and we pretty much came to talk about business credit. John is one of our business credit expert. He's probably not going to live up to that title as far as he says, but he does a lot of seminars. He does a lot of workshops, just discussing business credit with business owners, just letting them know how they can pretty much put themselves in position to use credit to expand or grow their business. I know we've used business credit in our business to expand it. Because of business credit, we're able to get multiple locations. We're able to use other people's money to make more money for ourselves. And that's the key. We're going to kind of talk about that. When we think about some of these major, larger corporations like Walmart, Target, do you know Walmart and Target, all that inventory, all those products that you see on their shelves, they don't own any of those products. They don't even buy it. They actually get a loan to have that stuff sit on their shelf until it winds up being purchased, and then they just pay back that small amount for having to purchase. Because you think about Walmart, they have a few thousand stores. I can't even tell you how many stores they have. But could you imagine how much volume of products that they would have to purchase to stock each one of those stores? So what they do is they don't even buy those products. they use a loan to borrow the money to get those products, and when that product is sold, they take a portion of their profit margin to pay back that loan. All right? Food for thought. Just want to let you guys know that information. All right? Anything you want to say?
As a business owner, if you're not utilizing the potential to get the credit that you can get with your EIN number, then you're not doing your business a service. Just like you utilize your personal credit and you can see all the things that you can get with your personal credit, you can do the same thing with your business credit.
Exactly. Business credit and personal credit, they operate totally differently. The way I like to explain business credit and personal credit, they both breathe, they both have a respiratory system, but I like to say business credit has lungs, or business credit has gills, and personal credit has lungs. What I'm trying to say is they both operate in the same capacity, but they both feed off of totally two different things. Personal credit takes a lot of considerations in mind when constructing your personal credit score. Your available credit, your payment history, your length of credit, the types of credit that you have, and also the new credit or the new inquiries. So it takes those 5 components and they categorize them, and each component has a percentile, which actually winds up being a breakdown to your credit score.
And the personal credit score, your highest credit score is 850, and the lowest credit score is 300.
Right. And the business credit, well, what's your business credit score called? It's called a what score?
Well, with Duns and Bradstreet, you have a Paydex score, and with Experian, you have an Intelli score.
Okay. So when we're talking about credit scores, with our personal credit, we have a FICO score or credit score. With business credit, it's mainly used as a Paydex score or Intelli score, depending on which bureau you're particularly using. They have a particular name for the version of their credit score.
And the score for business credit is only 0 to 100. We all know having a 700 credit score, personal credit score is having good credit. So if you have an 80 Paydex score or better, then you basically have a 700 credit score for your business.
Okay, right. So with business credit, as he said, business credit is ranked from a credit score from 0 to 100. 100 being the highest business credit score on the Paydex scale, okay? With personal credit, just so we can kind of get it lined up, personal credit has a grading scale or point scale from 300 to 850, okay? Paydex, 0 to 100, FICO credit score, 300 to 850, okay? Business credit runs totally different than personal credit. Business credit goes on how quickly you can pay an invoice, okay? So let's say hypothetically, John owns a company that sells, let's say,
Janitorial supplies.
Janitorial supplies, okay? He has a janitorial supply company. I wind up ordering supplies from his company, okay? But before I order those supplies for his company, I actually wind up setting up a business account with John's inventory supply company, okay? If I set up that business account, he's going to give me a line of credit. Now, that line of credit is going to be for X amount of dollars. I say X amount of dollars because based off of John's trust level and my financial stability determines how much of a line of credit he wants to give me with his particular business.
And mostly dealing with companies where it's inventories and products, you're usually going to get a net 30. Meaning it's going to be due once the product arrives and you receive the product, it's due in 30 days.
Break down that 30 a little bit more.
Well, most credit cards, you get a bill. Personal credit cards, you have your balance and you have a minimum payment, where only a minimum payment is due on the due date instead of the whole balance. When you have a net 30, the net 30 is the whole payment is due. Whatever amount you borrowed, that is due in 30 days. With business credit, it's almost like Dre said, it's important that you pay your bills on time, but it's even more important if you pay your bills early. 15 days to be exact. If you have any bills due with business credit, pay it off in 15 days if it's a net 30 account. If they are giving you a revolving card and it's just minimum payment due, try to make sure you pay as much as you can early.
Right. So with business credit, as I said before, it goes on how quickly you can pay an invoice. So I ordered John supplies from John's company. He invoiced me, let's say, on the 1st of the month, okay? He gave me a bill on the 1st of the month saying, Andre, you owe me $300 on the 1st of the month, okay? When I get that bill, if I pay that bill within a 14-day period of me receiving it, it should therefore give me a very good Paydex rating and therefore result to a high Paydex score, because it's showing that my business is revenuing and we can borrow money on a short period of time and not have to draw this out for a longer period of time.
For the newer business owners, you're not gonna get a Paydex score until you have about 3 or 5 trade lines showing on your Duns and Bradstreet credit report. Now, 3 or 5 trade lines can be anything from ordering from the same company 5 different times to ordering 5 different things from 5 different companies. But when Andre said it's important to pay your bills early, but it's also very important to have as many trade lines as possible so it's showing activity of your business and that you pay those bills on time.
Right. Like John says, and we kind of talked about that in the prior weeks about having open credit. You want to have, is it best to have just one friend? Let's say I got a flat tire. What's the best scenario, having one friend or having 10 friends when I have a flat tire? Most likely having 10 friends, because when you're down and out, you want to have multiple choices of multiple variety of people who you can possibly go to actually be able to borrow funds in that particular case. But from a credit scoring standpoint, the more experience you have in having relationships with multiple vendors or multiple creditors shows credit strength from that standpoint. Why? Because you can handle multiple relationships and handle every relationship in a decent or respectable manner. Therefore, it's going to equate to a decent, or should be equating to a high Paydex score. Okay? So Paydex score is actually broken down based off of how many days you pay that invoice. So remember, I said in order to get a pretty decent Paydex score, you have to pay that invoice within 14 days.
Speaking about Duns and Bradstreet, do you have to pay for your Duns number?
No, you don't have to pay for a DUNS number.
It's free.
It's a free process, okay? However, DNB, Dun & Bradstreet, they might call you if you're a business owner. They might contact you. They might solicit you. They might send you an email. They might be telling you you can pay a few $100s to a few $1,000s to have them set up your Dun & Bradstreet number when it's actually something you can do on your own.
Actually, if you ever get a hold of Duns & Bradstreet, or you have to call Duns & Bradstreet, they have 2 different teams. One team is called the advisors, the credit advisors, business advisors. Those are the ones you don't want to talk to. The ones you want to speak to is the technical assistants. If you get a hold of a technical assistant, they will actually help you set up your Duns & Bradstreet profile for free over the phone.
Okay. Who likes free? If you like free, please press 1 if you like free.
Don't let Duns & Bradstreet charge you hundreds and hundreds of dollars to do something you can do yourself. It's very simple. With Duns & Bradstreet, you can monitor your business credit. Real quick, when registering with business credit in Duns & Bradstreet, you need to have an EIN number with the IRS. You need to have a name of a business registered with the state that you live in, and an address, a physical address. Working with businesses, you shouldn't have your address registered to your house. And what happens is when business owners sometimes start a business, where do they usually start their business?
Their home.
In their home. So what happens later on, as the business grows and you move locations, most business owners forget to update the information. And that's very important, is keeping your information current, especially with Duns & Bradstreet.
Makes sense. Okay. So back to that invoice being paid on time. If I were to pay my invoice, let's say at 21 days past due, that would probably knock down my Paydex score from that 100 to an 80 range to that 70 range. Okay. So what it's trying to say is every day that I'm later on paying that invoice, it affects my Paydex score more and more and more. Unfortunately, or I can even say fortunately, depending on how you want to look at it, personal credit doesn't actually work that way. They don't look on how quickly you pay your billing statement. They look at a multiple of things, whether it's your utilization ratio, are you paying your bills on time, are you applying for new credit, how long you been in the game, what's your credit mix. All these things actually wind up affecting that personal credit score, but with that Paydex score, it's only going on how quickly you can pay an invoice. Okay? All right? Does anybody have any questions? If you have any questions before we move on, please, if you have a question, please type your question. We're going to have Dan pretty much go through that question with us.
I want to get back to a little bit about Duns & Bradstreet. A lot of people don't know about, or they've heard of Duns & Bradstreet. They call them DNB, Duns number. Just so you know, Duns & Bradstreet, they've been around since, they were incorporated in 1841. So they've been collecting business information for a really long time. They're in last year they were about $1.4 billion business. That's how much money they collected by collecting people's businesses information. Not only that, but unlike personal credit that is regulated by certain laws and rules that the bureaus and the lenders and the creditors need to follow, there is no regulation in business credit. It's kind of they run their own game. And unfortunately, we have to follow those rules. But if you follow them and you play the rules right, you can win at this game.
Exactly.
So,
yeah, just to kind of piggyback what John was saying, the business credit field or the business credit realm doesn't really have any consumer protection bureau. They don't have the state attorney's office. They don't have all these other consumer protection advisory entities involved that will allow us to go and tell on these businesses to say, hey, we don't agree with the practices that they're actually using to extend credit, or we need to relook on these practices of how they're extending credit and how they're handling this. There is no advisory board when it comes to business credit. So it's like the Wild Wild West. With personal credit, a lot of rules and regulations are put in place based on your lenders and your creditors on how they have to effectively report that information. That doesn't hold water, doesn't stand anything in the whole business credit realm. All right?
and anybody can have business credit. I like to tell people anybody can have personal credit. You can be black, white, yellow, Chinese. Personal credit doesn't care what religion you study. It doesn't care where you're from. If you treat it right, it will treat you right. Having good credit is basically having good habits. And the same goes with business credit. You can build business credit. Any business can build business credit. The reason why I say any business can build business credit, because we're a credit repair company and we've built business credit. Most lenders don't want to lend money to a company that can fix bad credit. But with the playbook that we followed by building our business credit, we've been able to build, and I'm not trying to brag or boast, over hundreds of thousands of dollars of available credit with no personal guarantee. I mean, either through vendor accounts, credit cards, or just bank loans to the company. And that's a great feeling to have as business owners, knowing that we can wake up and just use that money to start another office and just go open something if we have an idea. And we don't have to use our personal credit. The problem is with most business owners is when they have to use their personal credit to float their business, then that means that their personal credit is taking a hit because the utilization rate is now going low because they had to borrow that money to put it into their business. But if a hiccup happens between now and getting the money replaced, then we're going out of business and we have bad personal credit. So that's what we need to try to stop. And as business owners, we need to utilize this vehicle that could give us endless potential to leverage our business to great things.
Right. Personal credit, personal guaranteeing loans. I'm gonna kind of get into that real quick. Want to be careful when you own a business and you personally guarantee a loan. I'm gonna give you guys a story. Back in 2008, 2007, I owned a mortgage company. Life was great. Could pay all my bills. Didn't have any issues paying any bills. 2009, we know what took place. The mortgage meltdown, the financial crisis. When that took place, I wound up losing. I actually wound up having to shut down my mortgage company. It's not because I couldn't do the job. At the end of the day, there were no banks out there to give money so I can be in business. So with that being said, I wound up shutting down my mortgage company in 2010. When I shut down my mortgage company in 2010, I had copy machines. I had all different type of, some type of business leases and business contracts. I'm not gonna say business leases, business credit that I needed to pay back or was supposed to pay back but couldn't pay back. But what I did was when I opened up my business and I opened up these trade lines in the business name, I personally guaranteed as Andre Coakley for my mortgage company. So when I shut down that mortgage company back in 2009, in 2012, I had bill collectors knocking on my door personally suing me for all this debt that I personally guaranteed for the business name. Now here it is, my business hadn't been open for 5 years, but I was being sued for a $30,000 copy machine. Do you think I really wanted to pay a $30,000 copy machine for a business that wasn't even open yet or even viable to even make money? So no. So what I'm trying to tell you is they'll give you the money, especially if you're personally guaranteeing it. Why? Because from the lender standpoint, they're putting two fish on one hook. They're getting you personally, and they're also putting the business on that hook also. So if any one of you become defunct or can't possibly pay, they can chase either one of those entities for those funds, okay? So theoretically, when you get your business growing and get it rolling, you want to get it to a point where you're not personally guaranteeing any debt for your business. The story that I just gave you should be a prime example of why you don't want to personally guarantee things for your business. However, the average business owner, when they're starting off their business, you might have to personally guarantee a few lines of credit to get the ball rolling. It's like you're a rookie. You're fresh on the scene. Ain't nobody gonna let you call the shots when you haven't shown that you can play the game yet. Okay? So once you play that game and you put yourself in position, then that's when the airways open up a little bit more.
When we were growing up, we were always taught business never personal. So after a while, you do need to separate your business and personal. Besides just being able to get money to borrow money for your business, I don't know if there's any contractors out there, construction workers, to do work with the federal government. Before you even register with SAM, you have to have a DUNS number. So they're basically telling you before you can sell a product or do a service to the federal government, you have to have a business credit profile established. That should let you know how severe and how serious this is. But with just the bonding, besides the lending, a lot of construction companies out there, I get a lot of stories that they can't get bonded because of their business credit. Business credit opens so many avenues for your business to be able to get things like bonding, vehicle financing, equipment financing, inventory financing. You can leverage. Once you establish your business with a business on some type of net 30 account and you were to get a large contract, because you probably have that relationship established, you can use that contract and leverage your business to get more line of credit, just because you've already established credit with that business. So that's why it's important to have business credit. Path of least resistance is what we believe in, and that's what we think.
Exactly. And just to let you know, okay, so when I talk about business credit, when we talk about it being the wild, wild west, with business credit, we can go look at any business's business credit profile right now. Let's say I want to go look at the Walmart's business credit profile that is 2 miles from here. All I need to do is put in the name Walmart, and I put in their business address, and I can see how many trade lines they have. I can see what their business credit profile is. It's the total opposite of personal or consumer credit. Personal credit, I would need your authorization or your consent before I would be able to take a look at your personal credit profile. With business credit, you don't need anybody's consent. So I can look at all my neighbors, all my business neighbors, every office that shares this office space with me. I can actually go into DMB, go into our platform of DMB and actually pull a version of their credit score or their PayX score from their business standpoint. Okay? So it is totally the wild, wild west. There are no consent. There's no disclaimers that need to be made. So your business credit profile is butt naked. Long story short. There's no clothing on it. All right? It can be seen from anybody at any given time. So just keep that in mind, because if you are having a business and you are doing certain things, please don't think that if you're doing business with other people that they can't see your business credit profile. They might not be doing business with you because they've already seen that business credit profile and they know that you're already a little bit rough or banged up, okay? So that's that. All right, so we're going to get into the checklist of the top things you need to have put in place in order to build or construct your profile. But I did see a question real quick.
Dominique Cartwright asks.
Dominique Cartwright, yes. The
DBA, is that for every business?
What's up, Dominique? How you doing, sir? DBA, yes. DBA, you got to be very careful. DBA is really not a true tax liability. If you're doing a DBA from a business standpoint, you are personally taking all the tax burden. However, I would tell you consult a tax attorney or a tax preparer. That's not my skill set. However, with a DBA, that is probably one of the most least favorable sales in your business. Okay, so you possibly want to look at possibly even getting into an LLC or probably having that shifted into some type of S corp or C corp. Okay, so DBAs you kind of want to stay away from because the tax liability falls directly onto the business owner. I think I saw another question up there by Ms. Holland McLean.
Yes, Sean McLean asks, when starting out in a new business with no credit, how can you start out establishing credit?
Okay, good question. She says starting off a business with no credit. One of the first things you need to do is
register with Duns and Bradstreet,
Right.
and make sure that you have your credit profile set up with all the correct spellings of your business name, the location, and that you have a Duns number. Once you have the Duns number, then you can start reaching out to some unique companies that do give business credit, net 30 terms. Uline, Granger, those are two right there that will give you usually a line of credit for your business to get you started. And like I said, to eventually get the Paydex score, you need to have at least 3 to 5 trade lines, registering on your Duns report to be able to get that score you're looking for.
all right, and even better than that, we're going to give you everything you need to do in order to be able to put yourself in that position right now. And actually, if you throw up your email address, if you have an email address,
Or inbox us.
Inboxes, or give us your email address. We're going to throw you this sheet with these 20 tips right here of what you need to do to pretty much set up your business credit profile. That's where we are right there. If you guys need us, please give us your email address or feel free to inbox me or Credit 360. And we'll be sure to get you that information, all right? So we're kind of giving you the blueprint, but we're going to verbally discuss it right now. But if you need something a little bit more in detail, feel free, all right?
The first thing you need to do is come up with a name and register that name with the state that you live in.
Right. So that kind of goes back into somewhat what the question Dominique asked us. You know, what type of entity should your business be? This is where you're going to set it up with the Secretary of State or divisions or Department of Corporations, depending on how it's labeled. And this is just telling your state that you're in business and you run it. Okay. So this is normally the first step that you need. Prior to that, you need to have a business name. You need to make sure that your business name is available and not being used by other businesses. Okay. And you can normally do that by checking in your Division of Corporations or your Secretary of State.
For people in Florida, sunbiz.org. Just so you know, it's about $125 to register your business with the state of Florida, correct? $125?
Give or take, depending on what entity.
It's worth it. If you have an idea, if you have a product, a concept, register yourself with the state of Florida. The next is
obtaining your federal tax ID number or your EIN number. You might hear it labeled as a tax ID number, EIN number. They're pretty much the same exact thing, all right? It's just the labeling of it that might be a little bit different. An EIN number is what you actually get from the IRS, which is the numerical identifier for your actual business. And it's also how your business pays taxes. It's also how you pay your possibly state taxes.
It's a unique 9-digit code that's just the same amount of 9 digits as your social security number, but it's a unique number given to you and your business.
Right, okay. So yeah, so you most definitely want to make sure you have your tax ID number, but you also want to make sure that you have the right type of entity linked with that tax ID number, okay? The next section or the next topic
is a bank account.
All right.
It's very important that you get with your local bank. You, go inside, speak to the branch manager, get to know them. It's a good idea. They might be the ones giving you money in the future. If you check all these boxes off and you build your credit profile, you could very well walk into the bank that you bank with and get a loan from them. So it's a good idea to start a relationship with the local branch manager and open up a checking account.
Now keep in mind, we're giving you this in the list of orders somewhat. Do you actually have to follow this order to the T? Possibly not. However, I will tell you, before you open up that bank account, you need to be registered with the state, and you need to have that tax ID number or that EIN number. All right. They're not going to open up that bank account until you have those two items put in place. All right. The next one is going to be, the next topic is going to be the business license. All right. You need to have your business license put in place, and your business license could be on a, as we talked about before, on a federal level, depending on what you are. If you're dealing with something with firearms and ammunition, or aircraft, they have to follow federal regulations. So they have to get federally regulated or get their federal license to be able to do business. Or if you're doing something on the state level, let's say hypothetically when I was a mortgage broker, I had to get a state license. If I'm a realtor, I have to get a state license. So if there's anything there's a state license, you have to actually accomplish that from the state level. And there's also going to be that city license or that municipality license. Depending on where you stand and where you sit, some municipalities require you to have a license in whatever scope of business you do for their particular city or municipality, okay? All right, so keep that in mind. Actually, I'm gonna let John talk about the next one.
The next one is a separate phone number for your business. Not just because it's a good idea to have a business phone number and your own personal phone number, but when we're talking about business credit, these are records. These are searchable records. When a bank does a search on you, they want to see that you're a legit business and that you don't have a cell phone registered to your business. They want to know that you have a landline and that these are the things that they look for when they lend money. If you have all your T's crossed and all your I's dotted, you can get your hands on the pot of gold. But you got to have all your T's crossed and all your I's dotted, and this is one of those T's.
Right. So, yeah, when we're talking about that separate phone number, what they're doing is if you have a business and they're working off of their cell phone, don't get me wrong, you could be like, and it's crazy because we have some people who are in the landscaping business that their business is naturally outdoors. They're not stuck to an office. And we still ask these clients or customers to get some type of landline or business landline if they're trying to build their business credit. Why? Because now it shows them as being a viable business, not a mom and pop. Keep in mind, this lender or creditor is extending money to you. They want to extend money to somebody who they know is fixed, who they know is not running all over the country somewhere, and they're chasing them for their money. So if you have a landline, something that's a little bit more secure and a little bit more fixed, it makes that lender feel a little bit more comfortable that, number one, you're not a mom and pop, number two, that you're not going anywhere anytime soon.
Business credit is all about growing. And as you grow, maybe in the beginning, like Dre said, you had to use your personal credit, you had to use your cell phone. But as the business grows, we need to separate the personal from the business. And this is just one of those things that in the transition of growing, you need to do.
Right. Now, some of these things are transitional aspects of it. Your business might not be in a financial place where you can get a landline just to be able to start building business credit. So you got to have a viable business. You got to be revenue. You got to be making money to be doing some of these things in the first place in order to be able to start kind of growing your business. And the first thing I would tell you guys, I'm kind of getting a little bit off topic, but get me back on topic when I get off of this. We believe in credit. We don't believe in debt. So the last thing I want you to do is open up all this business credit and think you can open up a business solely on credit. You can open up a business solely on credit, but it's probably not going to be profitable. Why? Because all the profit that you're probably making is really probably not your profit. It's actually going towards interest to pay back this debt or pay back this loan. All right? So a lot of the business lines of credit or credit that we do have, we don't use that credit unless it's two reasons. Number one, emergency. Or number two, we're using it, well, let me back that up. With business credit, we only use business credit for two reasons. Number one is to use their money to make more money for ourselves. That's our number one reason for using other people's money. The second reason is for emergencies, okay? When we're talking about real emergencies, business emergencies, not the little simple stuff that, we saw this couch that went on sale for our front office and, we think it would be the best time to buy it. I'm talking about emergency like, for some reason you're having problems paying the bill, you're having some issue acquiring some type of machinery that you need to complete a job, something that's actually going to actually be that leverage or be that bridge for you to get from point A to point B.
Or we use the credit cards. We do use the credit cards, but we just make sure we pay them off before they're due in full because we don't believe in that interest. We don't believe in us getting charged interest. And we like the points. Travel points come in handy when we got to make a trip. So we do it. We got to learn how to leverage the credit cards. When someone says they're willing to give you 2% cash back or give you so many points, then take it. Just make sure you don't get charged the interest that they're trying to charge you. That's the trap. So if you can get free money, take it.
Okay. Cool. All right. So the next topic or next subject is going to be your business website and email. Okay. All right. First of all, do you have to have a business website? You eventually do want to get one, but again, it's all done in stages. There is also what we call a landing page, which can possibly be done a lot cheaper than the website. Okay, a landing page is just a one-page explainer of your services or your business. A website is normally going to be multiple pages, breaking down your business, breaking down your services, breaking down your scope, breaking down your staff, breaking down your about us, breaking down your locations. It's a little bit more detailed. However, you can possibly still get by for those small mom and pop businesses. You don't have to go spend thousands of dollars on the website. You can possibly go get a landing page. Okay.
It's how big you want to be. I mean, if you want to stay mom and pop and stay small and just grind every day, then yeah, you don't. But if you're trying to grow and you got to conform, like this is 2018, everybody's on their cell phone, everybody's looking up stuff digitally. You need to be digital with them.
Yeah.
And it's just part of one of the T's. A lot of lenders won't lend money unless you have a website. So if we're really talking about the end goal being getting money and getting money to grow, then yeah, you need a website.
All right.
It's simple.
All right.
GoDaddy.com.
Yeah, and you can go to certain places. Even Google has a website. If you open up a Google My Business page for your business, they even give you the opportunity to open up a one-page website, which you can use it. It's free. Don't get me wrong. It might not be the most appealing website. However, it suits the purpose. When they put in your www.yourbusiness.com and your business comes up, that's all they're really making sure that you are truly in business.
And it looks a lot better on an application than NA.
All right. You're a business, all right? And keep in mind, as John just said, we're in the digital world. Even speaking with that digital world stuff, we're a credit repair company, and we have an app in the Apple Play Store. We also have an app in the Google Store. Why? Because I believe in the future, people are going to be more in tune on their mobile devices. So what we need to do is start building around those platforms, all right?
And our website. We just redid our website. We just remodeled it. We're always changing things. Like, it doesn't stop. Everything evolves. Your business evolves, everything evolves. Just because you do it once doesn't mean you're not going to have to do it again. Get familiar with it, enjoy the process.
All right. If you guys have any questions, please put them below. Please put them in the comment section. We're going to try to answer any questions before we get off. So please put those questions in. If you can hear us, please press 1. We just want to make sure that you guys can hear us. There is any feedback, anything, please let us know. We just want to make sure that we're coming through crystal clear, all right? While we're on business website, the other thing is your business email. Very, very important, all right? If you call the owner or president of Coca-Cola, right, and you're trying to do business with this guy from Coca-Cola, the soft drink, and this guy sends you an email and it says president of Coca-Cola at gmail.com or at yahoo.com or at ymail.com or at me.com or at icloud.com, you're going to realize that, you know what, this is probably not a real business. They're a mom and pop. All right? So having your email address somewhat state your business name is very, 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 very important.
It solidifies you as a business in some sense. When someone gives me a business card and their email says at gmail.com, it's really hard for me to take them seriously. So when you do have a business card and it has your business at thebusinessname.com, that solidifies that you are a legit business in that person you're meeting eyes.
All right. And that's something that can be also done on that GoDaddy platform. So you can knock out your website and your email address all in one platform.
We got one of our girls in the office. Didn't she start a business the other day?
Yes.
And it took her how long to do the GoDaddy page?
15 minutes.
15 minutes to get a GoDaddy page set up online.
All right, with an email address.
And she designed a clothes designer on the side. So we congratulate her. That's all we actually encourage all our employees to start a business.
Yeah, actually, we do that. The reason why is because we want everybody to have something of their own. There's nothing wrong with having that 9 to 5. There's nothing wrong with using that seed money to grow your business money. Most people we know just can't go out there and open up their own business. However, if we can parallel ourselves with having some type of substance of income, with also finding some way to provide income for ourselves through self-employment, opening up our own business, anything along those lines, the sky's the limit. The sky's the limit. Were there any questions? No? Okay, perfect. Okay, so.
Email address, very important. The next one, when you is 411 directory. When you get your business landline, make sure you register with 411. I know it sounds obsolete because we haven't heard 411.
They probably don't know what 411 is.
Well, for the 80s babies.
If you under 30, you don't know what 411 is. We already know what.
For the 80s babies, 411 is a directory where businesses and people register their name and number. As a business, it's very important. The reason why is when banks do research on you, they want to know that you're registered in these databases. So it's very important when you do get your landline, please register with 411.
And 411 does not only necessarily just really equate to a for business credit purposes. It also gets your business seeded and out there and possibly put in other search engines. It's funny because a lot of the things that we do everything that we're giving you today is we have clients pay us to do. We're just giving you free information. We're just not doing it for you. Okay?
Everybody like free.
All right. Yeah, so when we're talking about those, some of the clients who are paid for our services, it's amazing that we see their business growing as we're telling them to do some of these things that we're having them do just for business credit. Why? Because these certain things or entries that we have them doing are actually growing their business and putting them in a more publicity, putting them in.
They're leveraging their business to more jobs. The gentleman, what's his name, with the lawn service company that bought the truck.
Dwayne.
Gentleman, he came by, bought a truck, business credit, big dump truck for the lawn service. I mean, he was able to double his business because of it.
Right. And he was able to, actually he came in for business credit. We actually constructed his business credit profile. He purchased a landscaping dump truck, the kind that has the lift up bed to dump everything out. He wound up actually purchasing that truck with no money down, but he was actually working using a pickup truck, using multiple pickup trucks before and trailers, but he was able to compact everything into one truck, one trailer. And he looks like a bona fide business. He tells me all the time about how when he pulls up on the job, that his particular prospect or particular customer is actually engaging in his sales cycle, his sales funnel, a lot faster. Why? Because they see that he's a bona fide business. His memorabilia with all his logo, with everything along those lines, they know that this guy is the real deal when it comes to lawn maintenance. All right? Good point. The other thing is a physical address. All right? Physical address. So keep in mind, you can be an online business. You can be doing things online. You could be a landscaping business. But when you have a physical address, you normally want to have a commercial address for your business. Okay? Am I saying this is mandatory? No. Is it very, very useful and very helpful if you do have it? Yes, and the reason why I say that is because most business owners start off, as John said earlier, working out of their house. You might not have the capacities or capabilities to have a commercial space. We understand that. Please don't let this segment of it stop you from doing what you need to do.
I don't mean to cut you off. This is not a checklist on how to have a business or how to run a business. This is what you need to have a business. This is a checklist on to establish business credit.
Correct.
So these things that me and Andre are going over, you're saying, oh, I got a business, I don't need that. You're absolutely right, you don't. But if you want business credit, if you want to be able to leverage your business to grow to all types of new heights, then yes, you need business credit. Cash can only get you so far in today's age. So I like we like to say in the office, cash is king, credit is queen, and it's very important that you do check off each one of these boxes as minute or as little as inconvenience as it might be. In the long run, it will definitely benefit you.
Yeah, we actually it's funny the list that we're going. We randomly go through this list ourselves for our own business to make sure there's nothing that we need to scale down or skew down to make sure that we're not missing the segment. We're not getting the full credibility from these particular checkpoints.
It's very important, man. I check our business credit profile probably just as much as I check my own credit profile. I log on to DMB 2-3 times a week just to make sure everything is tip top, because you never know.
Right. And just the same way, and keep in mind, remember, we said personal credit has consumer protection bureaus involved. Business credit doesn't. So that's why it's that much more important to make sure you're reviewing your business credit, because things could be taking place, but it's going to be more difficult for you to get it taken care of. Why? Because there's no one policing it. You can't tattletale on this particular business lender because you don't like the way they're handling you. There's no one to really police that particular entry on your report. So it's very important to kind of, be sure that you're monitoring your business credit on a daily basis. That way you're not running behind the 8 ball. Okay.
The next is a bank rating. I don't know if too many people are familiar with a bank rating. It's actually a rating that your bank gives you depending on how much money you have in their checking account.
Correct.
It's the bank rating is A
1 to 10.
1 to 10. Okay, so tell me more about it.
So 1 to 10 is your bank rating, depending on how much funds you hold in your bank. And they say funds, they're looking at, how viable is your business? If your business is running on E every month and they're not seeing, the revenue pretty much swelling, and they see it decreasing or shrinking, that true indicators that, hey, the business is probably not revenuing.
And positive money in the bank. Small business owners, because they don't want to show that they have money in the bank, because if they do, they got to report it to the IRS.
Right, so it's like a catch-22, like John says. Most small business owners who are actually making money normally don't put the money in the bank because they don't want to pay income tax on that money. So here it is, it winds up being the catch-22, the same money that they're hiding, they're not getting credibility for in this particular segment when we're talking about bank rating. Okay?
It's no different than as consumers when we want to buy a house. Every year, we try to claim as low as possible on our taxes. We don't try to claim a lot of money. But when it's that year to buy a house, all of a sudden we need to claim to be able to afford the house that we want to buy. So it's kind of the same concept. When you want to borrow money from the bank, you got to show them that you have cash flow. So if it's that year, you need to start depositing the money in the bank.
Right, you understand? Because again, all that's going to help determine how viable and how the business is cash flowing. Okay. The next topic that we want to talk about is public records. All right, very important. You don't have any liens, judgments, lis pendants, anything against the business that can say that the business is going under. If you have a lien on the business, a creditor is very hesitant with giving you money. Why? Because that particular lien could wind up affecting how you pay them. All right. For example, if I was getting married to a woman, right, and I had bad credit, and I had foreclosures on my credit, and I had open credit crisis, me marrying this woman, and we're not married, now could affect her financially. Why? Because she can possibly inherit, or some of that negative debt could affect how I handle our marriage, or even her relationship. All right. So a lender feels the same way. Keep in mind, they're getting to a financial relationship with you. If they're getting to that financial relationship, they want to make sure there are no other outside sources that can tamper with how you handle the relationship with them.
Just so you know, like having a judgment or lien against your business is almost like a death sentence when it comes to business lending. So if you do have any one of those against your business, you might want to hire a lawyer and figure it out, because it's going to be hard to move forward with that hanging onto your credit report, your business credit report.
And just to kind of caveat on what he said, you might not necessarily need a lawyer. It might be something you can just settle on or get worked out. Most business items are legal items, okay? If it's a judgment or something. So it might be something a little bit more than just you settling on it. However, it might be something that you can just kind of financially get taken care of. With that source itself, you might need an attorney. You might not need an attorney. Or you just might call Credit 360 and we can help you. But anyway, we'll leave that plug for some other time, all right? Getting into it is...
Like we talked about earlier, vendor credit. You're going to need at least 3 to 5 lines of vendor credit to establish a paydex score.
Give some examples of different, not names of vendor credit, but what are types of vendor credit? What is vendor credit?
Vendor credit is lines of vendor credit. So each line on your credit report is a different transaction, and it can be with the same company. So if you only have a line of credit with Uline and Granger, let's say just those two, and you order twice from Uline, you order once from this month from Uline and once from Granger, and then in a couple months you order from Uline and Granger again, that's 4 trade lines that should be reporting on your business credit report.
Yeah, 4 trade lines, or you might hear them referred to as experiences, okay? So business credit is kind of weird. They look at how many experiences you have, and each time you make an order and you make a payment on that order, that's considered an experience.
And it's put under the industry, not the name of the company. Like if you order paper products, it's probably office supplies. If you order...
Right, so what John is saying is when you pull a business, like if I were to pull Credit 360's business credit profile right now, not like personal credit. If I pull my personal credit profile, I'm going to see the name of all the creditors who I owe. Each creditor, Bank of America, Capital One, Wells Fargo, blase blah, going down the list. With business credit, it doesn't say the name of the actual creditor. It just shows what industry they're in. So it might say revolving credit card, Bank of America. It could say, I'm sorry, hold on, let me back up. It would say revolving credit card, National Bank. It might say
cash experience or paper goods, office products.
But it won't say the name of the actual bank.
Electric industry, things like that. So it doesn't say the name of the person or the company. It just gives you the industry.
Which can make it a little bit confusing, especially if you have an issue. So let's say you have 5 different trade lines open with business credit. And they're all in the similar realm. Let's say I have 5 different cell phone bills, all right, in my business name. The problem is if I have a problem with one of the cell phone bills, I'm not going to really know which one is the problem because it's not going to be listed by name on the credit report. I'm going to have to kind of shift through and filter through those 5 phone bills and try to figure out which one is giving me the poor experience or showing me the poor.
And if you do have a negative remark on your business credit and you request DMB to dispute it for you and you want to know who, they don't have to give you the name of that company. So it's like you can sit there and just fight it, and either sometimes they will and they say, okay, the name of the company is this, and then you can call them, or they don't have to release the name.
For example, we had something that we struggled with getting off our business credit. When I say struggle, the reason why we struggled is because we didn't know what the hell it was.
It was from a company that was here before us.
It wasn't even our company, but if you remember, business credit is attached to the address and the name of the business. So because of that, it was actually attached to a business prior to Credit 360. That's why we had so much problems figuring out who it was, because it wasn't really attached to Credit 360.
But we did get it removed.
That we did, all right? So, and again, so if you do have any credit issues or you have some things that are a little bit stubborn on your credit report and you need business credit repair, feel free to reach out to us. I'm not here to sell you guys today. We're here to give you information, but some things might need a little bit more massaging than others. If you need something massaged out, we can most definitely help you out with that, all right? All right. So the next topic is comparable credit, all right? When we're talking about comparable credit, we're talking about, you want to evaluate yourself for bigger loans and possibly non-bank lenders, all right? So with business credit, there's so many different ways you can go out there, you can try to kind of access funds. You might be able to get a loan just off of how much you have on your, what do you call it?
Inventory.
Merchant account. A merchant account. Let's say you have a merchant account. Let's say, so I don't know, most businesses don't know. If you have a merchant account, most businesses can get a loan that would match their monthly volume on their merchant account. So let's say hypothetically, we are a restaurant. We do $20,000 a month in revenue. We can show through bank statements that we normally average $20,000 a month in revenue. We go to some lending source. Most likely that lending source would match how much we revenue on a monthly basis. But we got to be able to document how much we revenue through our bank statements.
And the reason why we say evaluate your business to get a bigger loan is because you always want to be able to leverage what you can have against what you want to do. Because if you're trying to do something, you need to make a move, you want to know that you have access to that money. And that's what, and then that's why you say, just because if you're given the loan, or doesn't mean you have to use it. We have plenty of money on stash. Like, our emergency popped up, we can handle it. And that's why it's always good to leverage your business for larger lines of credit.
And even to kind of piggyback on that a little bit more, okay, so when you talk about valuation of your business, how to value your business, the credit that your business has is also part of that value. So let's say, for example, I have a business that is worth, just off revenue, let's say $500,000, okay? But this business, just off of revenue, which means just off of sales or services, it's worth $500,000. But let's say this same business has access to $300,000 worth of credit. That business is just not worth $500,000. That business is now worth $800,000. Why? Because if I were to sell off, or they were to sell off that $500,000 business, it is also coming with that $300,000.
And why is it coming with the $300,000? Because it's not personally guaranteed. That credit is transferable to the next business owner.
Exactly.
It's just the business credit, so it's transferable.
So it's attached to the actual business, not the business owner. And that's one of the other reasons why it's very important to build your business credit. Because hypothetically, if you were to sell your business, now keep in mind, a little bit of time, a few $100s, can possibly get your business a few $100,000 in credit.
Okay, all right.
So imagine if you were to put that time and put it together, but then sell your business along with that line of credit. That line of credit is just a whole nother business, a whole nother cash proposition to be able to leverage your business for that sale. And what business entrepreneur who's purchasing your business would not want to buy a business that already has lines of credit leverage attached to it?
I mean, think about it. If you're trying to buy someone's business, and then you look at the business and you realize, yeah, they obviously not only are they a good business, but they have over $300,000 of available credit, and that business became a lot more attractive.
Right, because the business already has funds to float. So if the business gets a little bit, shaky, the business can go into its own respiratory system to help kind of survive and keep it going, versus that business owner having to go into his personal pocket and personal stash just to try to keep this business going. All right?
Next is, once you establish your business with a credit profile with Dun & Bradstreet, you also have to establish yourself with Experian and Equifax. Those are other two business credit monitoring bureaus. If you've noticed, we didn't say TransUnion. TransUnion doesn't do business credit, so you don't have to worry about them. But the three main players in business credit is Dun & Bradstreet, Experian, and Equifax.
Correct. All right. So that's actually going to be that last step that you need to put in place, is making sure that you have the other two business profiles set up. Keep in mind, with business credit, totally different than personal credit. Personal credit, when you turn 18 years old, or not even when you turn 18, when you acquire your first trade line or piece of credit is when your credit report is established. With business credit, you actually have to go to DMB. You actually have to go to Experian. You actually have to go to Equifax. You actually have to set up your business credit profiles with them. But the problem is, most business owners don't know how to correctly and effectively set up their business profiles with these entities. And what does it do? It starts off building your big, strong business on a weak, lousy foundation. All right? And what happens is, you're probably not going to get as much credit juice as you really would like. This is because you don't have all your I's dotted and T's crossed on how your business was set up and structured from the first place. All right? So just to recap, business credit can be the lifeline of your business. However, if you're not utilizing business credit, you're probably doing yourself an injustice. You're probably not giving yourself.
You're doing your business an injustice.
You're doing your business an injustice. Why? Because your business has its own respiratory system. As most business owners, again, as we talked about before, we normally leverage all the business debt in our personal name. So let's say hypothetically, I go out and I buy a $50,000 Sprinter van from my credit repair company because I want to take my staff everywhere we go when we do things. I can go buy that Sprinter van in my name, but what happens is, or what goes wrong is when I go to buy a truck or buy a car in my own name, or a house, or even try to get credit cards, they're going to be like, you know what?
You're overextended.
You're overextended. You already got all of this other debt over here, but I'm going to be like, hold up. It's not really my debt. It's my business debt. They're going to be like, no, hold on, Andre. It's on your credit report. That's your debt. It's not the business debt. All right? So that's why it's very, 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 very important to leverage your personal credit and keep it separated from your business credit. All right? All right.
Until next time, I enjoy being here with y'all, and if there's anything we can do, please feel free to give us a call. Like I said, my name is John. It's Andre.
We're going on. What we're going to do is tag 5 friends, tag 5 business, future business partners, tag 5 people who you think can benefit from this information. Don't be selfish.
Or if you know some information you want us to speak about, if there are certain topics you want us to talk about, please drop us a line. Let us know. If you want us to email, send you this form, there's 3 of them. We have 3 different sheets we can send you. Please send us an inbox, your email, and we'll get these out to you.
All right. But if you guys got any questions, feel free to reach out. We love you. We're giving this free information only because we love y'all. We charge for this. This is something we actually charge for. But for this year, I said I want to put a platform together where we are actually helping people. Just get this information if they want to put themselves in position to utilize the tools that we're giving them and repair their credit or construct their business. We're all for it. We love y'all. Peace. Thank y'all for hanging out with us. Once again, Credit 360, helping good people with bad credit.
#Credit Heroes.
All right.